So what will be the best bet for investors in 2013? Taking us through their individual visions, David Dahl, he's the CEO of Sequent Asset Management, Peter Schiff, the CEO of Euro Pacific Capital, and our own senior economics reporter, Steve Leisman, join us with their predictions here. David, start with you. What are you looking at? Especially, I mean, bear in mind, we're going to be still feeling the effects of the fiscal cliff, and technically we're going over it tonight. Does this affect your thoughts about investing in 2013?
Absolutely it does, Bill, and it has. The last 2 months we've seen a marked retreat from U.S.-based investments after U.S.-centric holdings, the S&P 500, S&P 100 showing strong leadership in the first 10 months of the year. What we've really seen is now foreign markets picking up the slack as investors have voted with their feet. So I would say that when we look into 2013, the opportunities most likely exist outside the United States, not here in the U.S.
David, outside of the United States is a very large geographic area. Can you narrow it down for us, like Asia, Europe, Africa, emerging frontier? What is it?
Yeah, of course, Mandy. And that's part of the asset selection that you have to do. For us, one of the best areas we've seen has been in emerging market debt. You know, it started out many years ago with the BRICS, and recently we've moved in the last 5 or 6 years to the N11. By looking at those emerging markets where we can have sovereign debt, maybe moving even towards corporate debt, and relying on a manager, a good fund like the Fidelity Advisor Emerging Market Fund, that's where opportunities exist.
Peter, I'm really interested in what is going to be the key driver of the markets overall. I mean, I'm kind of sick of politics being the driver, right? Because it means that we're not really being driven by fundamentals. We're being driven by bickering out of Washington. We're being driven by headlines every other hour. What will drive the markets in 2013, and will it be justified?
Well, if people understood the fundamentals, it would be a whole different story. I think the fact that so many people are still confused about what the fundamentals really are, we're in some terrible shape here in the United States. And I think the message that we are sending the world with respect to the negotiations to avoid the fiscal cliff is that we are never going to address the fundamental problem. We're not going to stop the spending. We're not going to stop the debts. The Fed's going to keep on monetizing the debts until we have a currency crisis. That's the bottom line. We're going to have to be forced to act responsibly. And if the dollar is going to come down, I think it could come down a lot in 2013, then that's another tailwind rather, for investing abroad. And I agree with your guest. I like a lot of these emerging markets. I like the action, particularly in the last couple of months, in a lot of the Southeast Asian markets. We've been investing in places like Indonesia, down in Mexico, some of the more exotic locations. But you got to get out of U.S. dollars. And I'm surprised that gold didn't do better in 2012.
Peter, why would you invest in the country whose terms of trades are getting worse, rather than in the country of the United States with a depreciating dollar where the terms of trade are improving?
Well, a weakening dollar doesn't improve your terms of trade. What that does is it makes it more expensive.
That's exactly what it does.
No, it doesn't.
It helps export.
The dollar, Steve, the dollar has been depreciating for decades.
And
look at our trade deficit.
It's not been depreciating for decades. It's been up a while.
Yes, it has. Where you been?
It's not.
Steve, do you see a significant depreciation of the U.S. dollar in 2013?
I don't see a significant depreciation. I think what's really interesting is what we've learned is that